All right. What is going on, everyone? Welcome back to another episode of the Hizzy Hustle. It's been a few days. I have been extremely busy. We just had our winter carnival here in Vernon, so that's what I've been up to. Um, yeah, just wanted to come and touch base a little bit more on the potential talks about rate cuts happening from Bank of Canada in 2025. We have the chief financial officer in the US for wealth management with BMO talking about kind of what he expects to see. We're seeing some interesting non-responses to all of the tariff talk and everything that's going on in the White House. It's clear that our market was heavily affected by it, right? Like our dollar hit an all-time low when all this tariff talk happening below the 70s or whatever. I think we're sitting at like 70 cents, 70 and a half cents or something like that. So there's a little bit of balance that's coming back into the market, and I think the currency exchange is especially kind of taking things lightly. Obviously, there's a lot of announcements, walkbacks, timeline changes, and all that type of stuff. So it's hard to say whether or not it's going to be a not permanent, but it's still up for debate on whether or not these things are still going to happen, whether or not they're negotiating tactics, etc., etc. So we'll touch a little bit on what he's got to say about it, and yeah, so not too long of a video for you guys this time, but let's get into it here and start by going over in the Okanagan over the last 24 hours. Obviously, it was family day yesterday, so probably a lot of stuff got put off till today. But we got 57 new listings, 32 or one back on the market, 34 price decreases, 2 price increases, 28 sold. So about half that came on got sold, or half the amount of what's coming on got sold, which is perfect. We like to see that. Good uptick. 20 canceled and 3 expired. So yeah, nothing too crazy there. And we'll move over here to Bloomberg, and we'll see what the chief financial officer of BMO has to say.
Okay, let's talk about how the market digests the ongoing tariff threats from the White House. We began our broadcast day here with a rates and currency expert who noted that the currency markets have not reacted in any dramatic way to the most recent tariff threat from Donald Trump. That's 25% on automobiles, semiconductors, and pharmaceutical drugs. And my guess reasoning was that these promises of tariffs get made, but they either get delayed or walked back, and the market is becoming somewhat inured.
I also would like to think that as he makes these threats, or I like to think that for the most part, a lot of Trump's administration and the people that work around him have no idea what he's going to announce until he announces it. So I think a lot of it, and the walking back and the timeline changes, has a lot to do with how they can potentially minimize the effect that it's going to have on American consumers, because our supply chains are so woven together that there's no possible way that you can do what he's planning on doing at the massive scale and the rate in which he's doing it and not affect American consumers, right? The price of gas is going to go up, the price of aluminum, steel, all this type of stuff, cars, they're all going to go up because, I think in the automotive industry, like parts and vehicles will go back across the border like 7 times or something during the process of building, which is beneficial for both sides of the border, right? He wants them to try to get over, but it's just not going to work that way. And I think he's trying to use a lot of external pressure in order to help push that agenda, right?
To those threats, what's your view of the risk inherent in the tariff story?
We think that's probably an accurate perspective in the short term, at least, that the market is becoming somewhat numb to all the tariff news that's coming, and it's really wait to see what actually happens. But
Oh, I messed up as well. It's not chief financial officer. It is chief investment officer with BMO Wealth Management. Uh, I'll update that in the description and the title.
We think part of what's going on behind the scenes is that the administration is trying to work out how it can actually enact certain tariffs and give certain exemptions so there's not too much disruption or damage to the U.S. economy. We don't think this issue is completely behind us. Perhaps the market is leaning a bit more on the complacent side at this point with respect to tariffs, because we do think that risk is still present out there. But right now, there's so much uncertainty, again, that the market, I think, doesn't know, whether it's a FX market or the equity markets, doesn't really know how to price this in.
Okay, you and your colleagues expect 2 Fed rate cuts this year. That, at this point, is a very out of consensus call. The consensus, of course, is 1 in December. Why do you think the Fed will cut twice?
Well, I think the labor market is prone to weaken more than is currently being anticipated.
So that sounds like a cut on top of the one that we already received. Right? Did that happen before the new year? Oh God, I can't even remember. Let me see here.
Anticipated or appreciated here. I think a lot of companies are going to try to use technology for growth, try to trim their workforce. We're seeing more layoff announcements have just taken place in the past couple of weeks. If you combine that with what's happening with Doge as well, and even in the most recent job.
Yeah, I don't know why my brain's not working. I've been overworked a lot over the last weekend. But yeah, last rate cut was 25 basis points in January 29th of 2025, which means they have one more scheduled in this year at the end of the year. But, you know, based off of what they're saying, they're expecting another one. So we'll see what happens.
Report in the U.S., if you really dig down deep, there were some signs of weakness. Hours worked was down. Most of the jobs that were created came from the healthcare and government sectors. It wasn't quite as robust a report as some people may have seemed to believe. So,
yeah, and it's just both sides that think that this is going to go well for one or the other is completely wrong, right? Like, you're affecting jobs on both sides of the border. I believe the automotive industry is the like Canadians own a bunch of these plants that are in the U.S. that also help employ U.S. citizens, and now you're going to potentially tariff them for no good reason other than to try to strong arm people into moving their entire plants or facilities into the U.S., which already happens in some way. So maybe he's just looking a little bit more into it. Maybe he's unaware. We definitely have a guy in the White House at the moment that shoots from the hip. It is what it is. We got to deal with it, but we can't be too reactive, you know?
We think that it wouldn't take all that much for labor market weakness to set in by mid-year and the Fed to be more inclined to cut rates another couple times.
You also are tracking investor sentiment closely. What are you seeing there, and how do you use investor sentiment measures as an input to your own market views?
Yeah, that's a very important and interesting topic here, because investor sentiment has turned quite negative. Actually, the most bearish that it's been in the past year, investor sentiment has become recently. And typically that's a contrarian indicator. Now, at present, it's difficult to put that in perspective because the political environment is so highly charged. And the reality is that a lot of investors will have some of their investment and market views influenced by what's going on politically. And so we have to take that with a bit of a grain of salt, but we do see that those very negative sentiment numbers that are coming out for investor sentiment should help to support the market and perhaps mitigate any downturn that could take place in the coming months.
Young Yu, thank you a great deal for stopping by and having this conversation with us. Young Yu Ma is Chief Investment Officer of BMO Wealth.
Yeah, so a lot of volatility in the markets at the moment. We have no idea what's going to happen. And it's really, really hard to dictate or, well, essentially have a say in it. We don't have a say in what's about to happen, right? We're in We're in it for the long haul. We're on the boat that we let sail 9 years ago with this government. This is the position that we're in. We're just going to have to work with it. Those of you who are much more cognizant of your financials and your budgeting and all that type of stuff, you have an opportunity to potentially come out a lot farther ahead than some other people, just based off of the fact that you will be able to capitalize on some opportunity when it comes. A lot of the people that are going to be pushed to further strain their paycheck to paycheck type of budget scheme that they've created for themselves, these people are going to find it extremely hard to get out of the rut that they put themselves in or that has been created around them, just because just of what happened, right? We're facing like a 2008 situation financially where we're just not able to, like, your money's just not worth as much as it should be, and wages haven't caught up to the fact, right? Like, in the average household here of a middle class family or something like that it can actually support a household and whatnot, it's like $200,000+ a year. That's absolutely insane that you could be making that much money and still have to be a budgeting, conservative, spending type of person, right? Like, that's just, it's crazy. Like, yeah, I don't really know. I don't really know what else we can do about it, but I definitely know that there's some opportunity here in the near future for people to come out on top. I know there's going to be a lot of people that are going to be unable to finance or refinance their homes and stuff when they go back in for their renewals. Oh God, I can't stop yawning right now. I don't know what's going on. So yeah, just a little bit of a touch on that. Yeah. Tariffs, man. Tariffs. I never thought I'd hate that word so much, but here we are. Anyways, catch you on the next one.